Okay, welcome back. Let's get right into the stock market technical analysis. We're looking for trade ideas that profit, okay? And to do that, we're going to use the chart. So if you're new to the channel, at very least subscribe, drop me a thumbs up. I think you could benefit greatly from this. And then additionally, if you're interested in learning this as a skill set, maybe follow along for a little while and then check out my course if you're interested. Link in the description below. It's priced affordable. Check it out. I don't think there's much to lose there, lots of value. Finally, I do have a private member group. It's $5 a month, and I'm going through additional market insights, throwing out additional trade ideas. I'm very active, a lot more active in that private member group than I am on just the general channel. So it's easy for me to communicate in that forum. So check that out. Link in the description below. Let's get into it and see what we got going on. Triple Qs, guys, tech. This rally recently has mostly been about tech. I'm looking here at the hourly chart on Triple Qs. You can see here that basically we've got this upward trend line we've been walking up. And for the most part, this is the rally that we've been in since the beginning of the year pretty much. Heading down to, I think we're heading down to the bottom of this trend line again. They just popped, they just had this little pop on the Fed, on the Powell speech, and that was instantly faded. So pretty bearish. I think we're probably going to head down to this. There's a gap to fill right down here, and it's about 301.50. So I think that's probably where we're heading by the end of today, somewhere down there, hit the trend line. And then that should be support down there. I don't expect that to break, at least not today. Now, if we do break this trend line, which I don't expect to happen today, then that would be pretty bearish. And we'll look at the daily chart now. Moving on the daily, you can see if we break, then we're probably going to head down for a back test of a minimum of the 200-day moving average. That's about 291, all the way down to this trend line, which I do favor a back test at some point of this trend line. Right now, I've got it at 285. You know, it depends on when you hit it, but that trend line comes off the bear market trend line that started back in 21. All right, you've got lots of tags of this trend, and so I think it would make sense we come in for a back test. Okay, first things first, back to the hourly chart. You've got to break this hourly trend line before we start that back test. I don't expect it to happen today. Looking at the NASDAQ futures, here's the hourly chart. Again, here's this upward price channel. We've just been walking up this channel. We got a little ahead of ourselves right before the Fed and the FANG earnings. And so I think it was very probable that we were going to sell back down within the channel. And we did, came back down within the channel today, right at the Fed meeting. They popped it to the top of the channel. And we've been rejected, and I think it makes a lot of sense. We head to the bottom of the channel. Let me grab the right tool. We head down to the bottom of the channel now. And that's it for right now, so we'll keep an eye on that. Okay, let's look at the SPY, S&P 500. Same thing, you've got the bottom of this channel right here. It's kind of down here, all right? And I think we're probably heading down to hit that trend line there. I don't see really any indication that that's not the case as of right now. So we look at the ES, the S&P 500 futures, and again, here's the bottom of the channel coming into support, getting close to the support level now on the S&P 500 futures ES. So we will keep an eye on that, look for a breakdown if we're going to get it. Otherwise, we'll probably hold at this support level. One thing you'll notice, though, this is a bearish rising wedge pattern on the S&P 500 futures. We're kind of coiling. And so we could very easily get that breakdown, down out of the wedge and start to do a back test. At the end of the day, you go to the daily chart here, and we'll have this trend line to watch. It's marked in blue on the daily chart, all right? And I would look for, if we break out of this wedge, we're probably coming in for a back test, okay? Gold. So here's the gold futures. These look like they're bear flagging. So again, we had an upward trend line to watch. We started to build some negative divergence. You can see it right there, just showing up on the daily chart. It was very obvious on the hourly chart. Broke trend and had a sell signal. And now, as far as I can tell, looks like we're bear flagging. So this would mark us out for some sort of a move, likely down to about, well, I've got this marked out right here. So anywhere down to about 1809, down to the 200-day moving average. Somewhere down there, I think, is good support, and that's the area I'd be interested in going long gold for the next move higher. So we will keep an eye on that one. Okay, let's go into some individual trade ideas I've talked about in the last few weeks. CAT, all right? So CAT, our sell signal. I've been really interested in shorting this since we got the breakdown right here. That was my initial sell signal. We back tested for a couple weeks leading into earnings. Had a big negative divergence on the daily RSI and PPO, telling me that, okay, this trend's about to reverse. And it was likely going to reverse on earnings. Sure enough, earnings came out. We gapped down, and we've been selling down ever since. So you can see we're pretty much moving down. We hit, had a little rally into resistance, and today continuing the selling. So I don't see profit. I don't see the next level of support until about 237.90, 238. Okay, level of support there. At the end of the day, though, I am looking for a move all the way down to about 200, which is a gap fill. The 200-day moving average is right around 208. So down here is my support zone where I expect CAT to ultimately end up. It's a swing trade. It's going to take time. We're not going to just go straight down. We're going to work our way lower. But so far, so good. So staying short on this one. Okay, DHI. So this one, again, upward trend line, negative divergence on the daily chart. We broke and it back tested for a few weeks. We had a pop right here right after earnings, and I suspected that would be the end of the rally. And so far, ever since that high, we've been selling down. They're trying to hold on to the secondary trend line. And you can see on the hourly chart, we've been kind of creating the secondary support line. Once that goes, I think it should be lights out for DHI. On the daily chart, again, my target is all the way down here at 78.80. So just need this trend line to go. I think it's going to go soon, and we should start to continue lower. Okay, WMG. Very much the similar setup. Negative divergence on the daily chart. Walking up the uptrend, had a sell signal. Back tested for, multiple weeks, as this wasn't probably likely going to sell down too much ahead of earnings. We now have earnings coming up. So this one's definitely higher risk, I would say, because earnings is coming up in a couple days, and earnings kind of a crapshoot. Can go either way. The chart tells me it's going to gap down with the negative, the negative divergence. But again, you could see we could easily, depending on how far away this thing gets, they could pop this thing up and make a new divergent high right around here. Okay, after earnings. And that is, I think it's probably a 50-50 that it does that. It could either pop up and make a divergent high, back testing into resistance. That would be objective to short right there, or it can gap down. So ultimately what I'm looking to do is probably go into the earnings relatively light on this one and then just take a position after earnings clears. Starbucks had on the daily chart, big old bearish rising wedge, negative divergences on both momentum indicators, breakdown and a sell signal. And then the last 2 days after that initial breakdown, they've been kind of doing some backtest action. This typically runs out of momentum, and we continue lower. So still looking for lower prices. I think we'll probably drop right down to this 101.37 and fill this gap before we get a bounce. So that's my next bounce level. And I don't think there's anything telling me to cover this short. So I'm remaining short on this one. Let's look at some longs. I've got Joe, coffee. All right, this is coffee. On coffee, you can see here we are in an uptrend. All right, we just came off a big divergent low right here. You can see bullish divergence right there on the daily chart. We hit that support level about 40, 70, 41 right in there. That's my buy zone. You can see it was former resistance. Now it is major support. And sure enough, off that divergent low, we rallied quite a bit. Now I didn't grab it down here. I just, didn't see it. But now that we're in an uptrend, we had a little pullback the last few days, hit the trend line. I went long right there. And so far, we are rallying. So I think we're likely going to move up to the 200-day moving average, about 55, 50, or there's some resistance up here. It's about 53 up to 54.85 in the 200-day moving average. So zone of resistance overhead, but that's still from where we're at now, a move up about 3-4% to the first level, 7-8% up to those higher levels of resistance. And a trade setup, not actionable yet, but lift, okay? This is an hourly chart. You have a bearish rising wedge on lift. We've continued to kind of walk up this wedge. Let me go ahead and see if I can extend this wedge out and grab any of that. Yeah, right in there, I think. So you've got this bearish rising wedge that we've put in on lift. We are starting to build some negative divergence on the hourly. There it is on the RSI and the PPO. Okay, and we're just coiling within that wedge. So a breakdown of the wedge, and let me go to the daily chart. I suspect if we break this wedge to the downside, we run down to the 200 simple moving average, 1538, before we get some sort of a bounce. And from where we're at right now, that's a drop of about 13%, and we'll see on when you get the sell signal. Okay, and then there's also some support down here about 1375. So those are the two levels I'd be looking for. No sell signal yet. We need to see that breakdown, some sort of impulsive move down, but we're pretty much at the apex of the wedge, so it should happen. It should happen this week, I would suspect. And we also have earnings, so it's likely going to happen on earnings coming out in the next 2 days. So that is what I have. Maybe a starter short. It's higher risk, obviously, with earnings coming out. So, all right, I'm going to leave it there, guys. Drop me a thumbs up on your way out. Check out the course if you're interested in learning this as a skill set. Join up in the private member group if you want additional trade ideas and market insights. Link in the description below for both of those, and I'll catch you on the next one.